Yeah. Are you vaccinated?
Yes, I am. Yeah.
Oh, okay.
Fully vaccinated. Probably I have to do the booster as well, and then we can go.
Probably. My friend was trying to go to Prague and was not allowed on a plane because she didn't have a booster.
Yeah. Seriously. Hello? Nona?
Yes.
Okay, you disappeared.
Hey.
You were talking and then disappeared.
Oh, really?
All right. Okay, guys. So let's start. I'm going to share it. If you see somebody joining, let me know that if I'm just turn on the microphone and let me know because I might not see it. Okay. So just a second. Share screen.
This is going on YouTube?
Yeah, I put it on YouTube on our channel. Yeah. You know we have a channel, right?
No.
No, you don't. Okay. All right.
So they get our voices, do they?
No, you actually, I turn off the sound on YouTube, so you cannot hear that. Because you see, every time when I record it, I actually have to download it after that, and then we put it on YouTube, and after that we placed it in our membership platform. But what's the point to do that double process when I can stream it directly to YouTube, and after that we can just provide the link to the our membership platform. That's it. So it's much easier to do this way. And anyway, you're not showing your faces, so if you want to show your face, you can. Now, guys, today we're going to talk about interesting company, Lumber Liquidator. Presume some of you probably traded it if you were with us maybe in 2014. So we traded a lot with this company. It has a very interesting history, and to be honest, if I probably was introduced to this company right now, I wouldn't invest in it. So I would probably skip it. Okay, but because I know this company for quite a while, I know the history, I know the reasons of what was happening in the last few years and what is happening right now. So it gives me certain confidence in the in the process of investing in this business. All right. Now, before we start, of course, the disclaimer, guys, just put plus or whatever tick that you understand that despite if through all the fundamentals and everything, you still have to make your own decision. And it's not a recommendation, it's just pure educational webcast. All right. Okay, so let's start. Actually, I'm going to put chat somewhere here that I can see it. Now, as always, we are going to look at current market situation, first of all, because it's interesting stuff happening. And then we're going to look at retail building supply industry. Value line gives its score 4 now. So it's a pretty good one. So it has a potential to grow. And then we'll analyze lumber liquidator, flooring, LL flooring, and we'll look at different possible trading opportunities there. All right, this is our plan. So if you have any questions, of course, you can ask. Now, you probably enjoy the volatility of the market. I don't know if you enjoy or not, the volatility of the market for the last, since already probably October, right? Up, down, up, down. And the last, like when we saw the previous down in November, December, say it's bounced back pretty quickly, and then we broke the highest level, previous highest level. So we went higher. But this time, after we bounced from the same level, okay, about 33,700, we actually didn't go all the way up, okay, and we even didn't go higher than the highest level in November. Okay, so just a second. I'm just wondering. Okay, somebody's typing in our chat that they're going to join. So so what can we expect right now? So if we go following this trend, the blue trend, which is like created, So we can go to around 33,200, and actually it would be still on a buying level. We can see that since May 2020, this level is pretty strong buying level, support level. So we can see it once, two, three, four times is broke through and then bounce back. 5, 6, 7, practically 8, 9 times. So it's a very strong buying zone, and I wouldn't be surprised when index falls here. It will slow down here and kind of try to check these levels again. So if we break it, there is no way to say how low we can go. So if there wouldn't going to be some problems, political, economical, or whatever, right? So we can see the fall lower. Although saying so based on technicals, we can say this, but based on what is happening right now, I don't see too many reasons why we should go lower, because earnings season is nearly over. Okay, so probably the last companies producing reports this week, and after that it would be a certain gap between earnings. So, and usually this type of volatility happens during the earnings. The only thing which I believe can affect the market quite a lot, it's all these issues regarding Russia attacking Ukraine. Okay, I don't think it's going to happen, but at the moment the media is stirring it up, and definitely it's affecting the volatility in the market. A lot of people don't know what is going to happen if United States get into the war, because some of them saying they're going to support Ukraine, some of them not, but still it's unknown territory. Okay, and we have to be aware of that. So it can affect the market, and hopefully it won't happen, but we don't know what politics are going to do. All right, so please be aware of those levels, and if you're trying to enter any positions right now, so think about it, because if the market goes down, it will pull and drag your companies most likely down as well. So, and if you wait for a week or a few days, you might buy your companies at the better levels. All right, so now this is Dow Jones. Standard & Poor, very similar situation. The only difference that Dow it's already broke kind of this middle level, and now it's trying to reach the lowest level already, which is 4,294, 95 here somewhere. We already actually tested this level, okay, on one day, big candle, and after that we bounced back. Similar situation, we didn't grow higher. We so those two highs, which we had in November and in December, we didn't reach them. Okay, so most likely we're going to see maybe for the next few days the index fall lower. Again, the earnings season is over, so that part of the kind of unknown information is gone. The information regarding increased interest rate is already there, so we already know what is going to happen. It's already affected the stock market. Okay, whatever happens now with the tension between China and United States, Russia and United States, that's probably the major reason which can affect the market in the near term. Okay, so at least that's what I see. Now, if we go for Nasdaq, Nasdaq fell more than previous two indexes. We actually broke through this level, which was in end of September, October, right? And now we're close to the lowest level. Now, if we look at this, it was previous highs, but I wouldn't say it's a strong buying level, even though these are levels. But I presume if we go low, we can break them pretty easily. Okay, and where I see Nasdaq to slow down, if we break those levels, it would be around 12,800, somewhere here. Okay, on those levels. The reason why I believe that Nasdaq has higher potential to go down, because this index is more like overpriced compared to previous two indexes. So I just going to show you, if we go to for PE ratio, so Dow Jones PE ratio is 19 now, and last year it was 31. And Standard & Poor 25. Last year it was 44, but Nasdaq last year it was 40, and now it's 34. So it's actually compared to these two indexes, Nasdaq didn't go down as much as Standard & Poor and Dow Jones. And the main reason probably because IT companies, they were in favorable situation last year. Okay, they were making more money and they suffered the least compared to other companies that actually benefited out of this pandemic. And people were reallocating money from like companies included in Dow Jones and S&P to those companies, like, I mean, which is IT companies. And you probably noticed that some of them, they dropped quite a lot. One of probably the biggest fall was related to Netflix, Facebook, and eBay, right? These three companies, actually Amazon dropped quite a lot as well, but then it rebounded after earnings. But these three companies, they dropped a lot. And other IT companies, they dropped quite a lot. Some of them like 20-30% already from the highest point, which was end of last year. Okay, but still, if we look at many of them, for example, Netflix, P ratio at the highest point was around 90, even more than 90. And now it's dropped nearly in half. So but P is still around 45. So it's still very high. Okay, so if the Netflix is going to slow down in their earnings growth, right? So we can see the further fall, and they can go to P ratio 15, 20. So it means it's another like fall maybe 70%, up to 70%. So, and of course it's going to affect the Nasdaq. So that's why if you invest in the companies included in that index, so be twice as careful compared to the companies if you invest in the previous two. All right, and this is how looks volatility index. We can see that the lowest level was around 15 during last year, 2021. Actually, if we go to 2019 and 2019, especially, probably the lowest point was around 9, 8, 9-ish. Okay, so on those levels, and we can see that the level of fear is a bit higher, and now it starts to grow. Okay, after each time when the indexes fall, volatility index jumps up, and then it doesn't go down all the way. So we can see it's kind of starting a bit lifting up its lower points. So here it was 15, here it was already nearly 16, then 17, 50, and now it's 20. All right, so it's kind of started growing. So people are more cautious about what is going to happen. Okay, so it's a good indicator of the fear on the market. Now, this is indexes, guys. If you have any questions about indexes, please let me know. If all clear, put whatever pluses, right? And then we'll go to retail building supply industry. Now, the company, like the industry, it's pretty big industry, okay? And it's very competitive industry. And there are many companies in this industry which are not, I believe that they're not included in that particular industry based on value line universe, all right? Because some of those companies, they can supply building materials, but they would be related to some other companies or some other industry, okay? But still, they will be selling some of the products related to this industry. For example, Amazon, right? Amazon sells a lot of products which can be found in these companies, but Amazon is not the building supply industry, right? Because majority of their business related to other products. So it is has a direct relation of profitability with the housing market, but not every company. If we go for companies which, for example, focused on supplying new houses, especially new houses. So of course, when the economy goes down, and the new houses not anymore being built, what happens? I mean, the total volume of sales in those companies suffers quite a lot, right? But some companies like lumber liquidators, they actually not suffering that much. And if we go back in 2008, when there was huge housing crisis at that time, lumber liquidator actually was increasing their sale. Okay, and the profitability was in the same level. It didn't go down. It didn't go up, but it didn't go down either. Maybe 5% only down. But then it started growing pretty fast already from 2009. So it tells us that some companies in this industry, they're pretty stable because people, they don't buy new houses, but they renovate their like existing or would say houses which they put for investment or something like that. Now, we can find different companies in this industry, some of them with a very wide range of products like Home Depot and Tesco. So they sell building materials, hardware, tools, plumbing, electrical supply, paints, like whatever, right? Anything. And some niche companies, like one of the companies which we analyzing today is Lumber Liquidator. It sells only flooring, hard flooring products. That's it, nothing else. Okay, and whatever related to this product. So they're niche products. And a lot of these companies, they have like huge presence, like our in Australia, Bunnings, and they have a presence in Australia, in America, in United States, in different offices, but some of them, they sell online only. So they don't have presence as a retailer, and whatever they have, it's only warehouses where they ship the products to the customers, because some of these products, they're like obvious, you don't have to actually see that in order to buy it. All right, so, and of course, those companies, they have certain competitive advantage compared to those companies which have to have a presence, local presence. Now, if you go to value line, you will see that retail building supply rank is 4, so which is one of the highest. 1 is the highest, like, I mean, up to 10 is the best rank. So value line believes that this industry has the highest potential to grow within the next 12 months. Okay, that's what basically means. Now, and when you read about it, they're really positive about practically every company. And the only company they're like cautious is Lumber Liquidator, right? So the company which we are talking about. And if we look at the size of the companies here, so we'll see that Lumber Liquidator even not on a radar, right? Because if you look at Home Depot, it's actually half of the industry, one company, right? And 1, 2, 3, 4, 5, 6 other 6 companies, another half, and 2 companies are not listed here. Like, I mean, altogether 7. So on that square, right? And altogether, value line has 9 companies. I didn't do the precise screening. The major reason I just wanted to show you certain parameters here. Look, P ratio. 9 companies included in this industry, and we can see that the lowest PE is 7.7 Lumber Liquidator has. Now, then the next lowest is 21, then 23, and then 27. Right? So it means that the company like Lumber Liquidator is undervalued compared to other businesses included in this industry, like at least 3 times. Okay, it's 3 times lower. So if we're talking about like housing and like problem, we'll say if something happens like that, increase in interest rates, it will affect the sales of the houses, like profitability of the business. And if we see that those businesses will suffer, so Lumber Liquidator doesn't really have that much to fall because it's already underpriced quite a lot compared to all other companies. So we have to be aware of that. But then we have to think, okay, maybe they have a reason for that. Maybe they have to go, they're going to go into the drain and they're going to into bankruptcy. But then the value line itself, look at this, what they're saying that projected earnings per share growth within the next 2 to 5 years, it has 50%. So actually compared to all other companies, Lumber Liquidator has the highest potential to grow, right? So, and when I see something like that, it's different discrepancies where like the lowest P and then the highest potential for growth. Why is it happening? The major reason, I believe personally, because Lumber Liquidator had such a huge volatility and problems within several years, like the last 7 years. And of course, it doesn't give a confidence for a lot of investors when we see this financial report. Okay, value line just have to follow that as well. So let's have a look. What I did, I just copied those tickers and put it in FinViews, and that's what I see. Just a second. is there. Just try to just make sure that if somebody is knocking, I can see it. So you can see a lot of those companies, they were high in price. They already dropped with the market, and still the AP is so high. Okay, can you imagine, for example, Fast, it was 64, now 51. So it's already dropped, what, nearly 25%. Okay, and it looks like it's support, but then we'll look at Fast, P ratio is 32. So even if it goes to the same level as the market, like indexes, which is around 20 now, so it has a potential another 30% drop. So you have to be aware of that, right? So, and all other companies, Home Depot, right? So it's already from 420 dropped to 350, so $70, which is what, 15% drop. And Home Depot here, P ratio is 23, close to the market, right? So not that much, but a bit higher, but still close to the market. So it's not that bad. But other companies, we can see they dropped quite a lot. So for example, here from 320 to 260, so already $60, so more than 20% drop as well. Lumber Liquidator from $35, actually sliding lower and lower and lower and lower, and now dropped to nearly $14. The interesting thing about this drop that it happens without any significant bad reasons around this company. It has a small volume of trading, and probably traders are not interested in this business, and it's kind of slowly fading away. And look at the size of the other companies. So if Home Depot, $372 billion in capitalization, right? Lumber Liquidator is 490 million only, right? It's a tiny company compared to all other companies. The only other tiny company is TTSH, so which is even smaller. It's 342 million capitalization, but it has a P ratio of 30 now. Okay, so and we can see other companies, they all would be billions, right? And the interesting thing about that here, that I looked at forward P ratio here is 14. So it tells that the earnings of Lumber Liquidator next year going to be much lower than this year, right? This is analyst projections. When I was trying to see what kind of projection Lumber Liquidator tells us, to be honest, I didn't find it. So they're not trying to do any projections right now because of Omicron and all these restrictions. So they are not sure how it's going to affect the market, and they're trying to avoid giving certain projections about their earnings. Okay, and that's so that number could be misleading, okay, for us as well. So we have to be careful on that. Now, this is what is happening with the industry. You have to understand that if the industry, the general industry, start dropping down, so it's going to drag Lumber Liquidator even lower, even though the Lumber Liquidator is much undervalued compared to other companies. But still, when everything goes in one industry, believe me, all the companies, they go down as well. Okay, so just be aware of that. Now let's see how Lumber Liquidator Flooring established. It was established in 1994, so it's already what, nearly 30 years on the market, right? And it was established by Tom Sullivan, and this guy was, I think it's Tradies, and what he was doing, he was buying, remaining flooring from different companies, like building companies, and then he was reselling them. Okay, and then when he saw the demand, he decided to open the shop. In 1994, he opened his first shop. In 1995, 6 months later, he already opened the second shop. Since that time, he started opening shop after the shop very quickly, and already went public in 10 years' time, in 2007. By September 2021, so 6 months ago, it was 422 shops in the United States, and it's considered to be the biggest niche player in this area. Okay, and they have more than 500 items of products in their list, when you come to choose whatever flooring, tiling, whatever you want to buy. So probably you will find it in Lumber Liquidator. The biggest problem, now we're going to look at financial results of the company, but I want to just pre-tell you what was happening there. In 2013, based on Leslie Lacy Act, the company was under investigation that they are buying flooring from Russian supplier who kind of cutting trees and then building those like floor tiles from Siberia. Okay, and United States, they have certain restriction on buying products from those areas because they consider it not to be just Russians, it's considered to be world-owned areas, and it doesn't really matter that Russia allowed to cut trees there and sell it. So America doesn't allow local companies to buy from those suppliers who cut trees there. All right, so they kind of prohibit buy from Russia. This is one thing. Secondly, a year later, they attacked Lumber Liquidator because they were buying stock from China, and they accused them that that flooring, which they bought from Chinese companies, they have high level of formaldehyde. Okay, and this is affecting the health of American clients, and as a result, the company was under the investigation as well. So I remember at that time, maybe some of you as well, guys, remember that the company actually had to go. They sent tests to check the formaldehyde to all the clients, and they discontinued the product straight away because they didn't know where it's going to lead and what they're going to find. So they stopped selling. And at that time, the products from Russia and from China accounted about 70% of the products in their range. So can you imagine? They had to discontinue huge amount of product in their line. And another thing, that products from China and from Russia, they were much more more competitive than the other products which they shipped from Europe, from Canada, from United States and Mexico, right? And during that investigation, they hoped that they're going to kind of prove that those kind of issues are wrong. And that was a very interesting situation, I remember. And if we go to technical analysis later on, I'll show you it once again. But what happened, that it was how it's called when the group of people join together, like law firm, find a lot of people who want to go against the Lumber Liquidator. They create this joint act, a legal issue. So, and I remember they, Lumber Liquidator was spending about $15 million each quarter on those legal issues. Now you have to understand that the company is pretty small, and it was eating the whole their profit which we're receiving. It's one thing, but secondly, because they also had to discontinue a lot of floor, and they had to write it off, it's also affected their profitability, right? So the two things which happened at that time. So first of all, company had a really big problem with the supply chain because they had to completely reshuffle their suppliers. It's one. Secondly, they have to discontinue whatever they already had in the floor and then write it off. And thirdly, they had high level of not operational costs, let's say, but extra costs based on legal issues. So that kind of investigation was running for quite a while, more than a year. And then Lumber Liquidator decided, okay, fine, we're going to just pay you whatever you want. They had certain agreement, but that agreement was before the court made any decision. So it's like a pre-court decision they made, settled, right? So Lumber Liquidator paid the money, everything went away. And then a few months later, Idala law firm attacked Lumber Liquidator with the same absolutely reason. So, and because if there is no court decision, about what was happening. So it's possible that other company, other firm, law firm can attack you again for the same reason, because there is no decision is made. And then they understood that they cannot pay each law firm again and again, because there would be a third one and then a fourth one. So they actually had to go all the way until a court decision, and they actually won. So at least there is no information about that they lost about this issue. So that issue went away, but they still got a fine for buying products from Russia, right? And they paid $13.5 million in penalties related to this Lacey Act. Okay, so that the fact that they source product from breaking, like, I mean, what a poor sourcing act. Okay, so this is kind of stuff like that. Now, I don't know, guys, but for me, it's really, it's not just because I have Russian background, but still, I think that it's very strange, right, that the government attacked suppliers from these two specific countries, right, Russia and China. So for me, it's more like political issue rather than business issue, but still, it's affected the company for very, very, very big thing. Okay, this is what was happening in this company, but since 2019, the company recovered and they start growing again. So because they are not buying that cheap flooring, so their margin is a bit lower, so the prices are higher. So they're not discounted shop anymore as they used to be. Okay, they're still trying to get as a niche and cheaper products than other companies, but it's not like it was before. I remember when I was visiting the website previously, it was like sale, 50% sale, 50% sale, 70% sale for certain floors. Now you can't see like that. Maybe they do run sales, but not as much as they used to do. Okay, this is kind of like that. So let's have a look at fundamental analysis. At this time, I didn't take value line. I took Guru Focus. I like it, Guru Focus. So let's see through Guru Focus. Now, what we can see here, look, P ratio now in Guru Focus 6.8, so it's a bit lower than value line. Value line report was issued quite a few months ago, so it might change something. So look, median industry 17. Even though if we just looked at this, maybe Guru Focus includes different companies, not which value line has. If we take value line, it probably would be around 25. Okay, then historical median for Guru Focus for lumber liquidator is 24. So it means that it sells nearly 4 times lower than its average in the past. Okay, and if we go, for example, on this line, okay, it's 1, 2, 3, 4, 5, fifth line. So we can see that from 2012, here we have information that was 19, 31, 37, right? It's the highest. At that time, the price was $119, right? And 28. So this was before this fall. So in 2014, first started investigation regarding supply from Russia and then from China, right? And then the company went into loss. Okay, we have company had loss, so that's why they don't have PE. Then when it come out, it was PE 28 and 14 and now 6. Okay, so very, very low PE. Now, usually we see these PEs such low when the company is kind of going into bankruptcy. So for us, it's a very important question. Maybe this is the case with the lumber liquidator. All right, so let's have a look what was happening with revenue per share, sales per share. So we can see here that the company was selling, I would say 2011, 24, 29, 35. It was very fast growing company. At that time, company, even when I looked at their value line, so sometimes they make 50 or 70% increase in sales every year. Okay, so that's why they had such a high PE ratio, okay, like 27 and 29. Then we see when the attack started, okay, so in 2014, we can see it's dropped in sales, but not that much, okay, around 10% at a low scale, so around $3, so less than 10%. So companies still stably was selling their product, right? So they still had about the same volume. They stopped growing, And the major reason for that, they stopped growing because the growth for this particular business is opening new stores. But at that time, they had to fight. They had issues with cash flow. They had to issue new shares because they had to attract the capital to protect themselves, right? And it wasn't the time to expand and open new stores. But recently, they started doing it again. So during last year, they opened 6 new stores. So they again stood on that path of increasing sales through opening the new locations for their business. Okay, now let's have a look at the earnings per share. We can see it was 93. You can see 168. So it's like not double, but 80% growth. Then 270, right? So more than 50% growth, and then start dropping to 23. All right. So when the Russian supply was cut off, and then went to negative zone straight away. Okay, because margin is pretty tight for this company, and of course, when all these huge legal costs jumped on the board, so the company started losing money. So let's have a look at the revenue per company. So if we go, for example, revenue and then operating income, you can see it was 42 million, 78, 126, 104, and then instantly to minus negative 83, 93, right? So these 2 years was probably the worst. Okay, this is the second wave of investigation. That's where they paid off. First wave and then the second wave as well, and it lasted like until 2018. Okay, and then now it's 16 million in 2019, 56, so it's 4 times growth. And now it's 60. So during the last year, we grew around 7%, not 10%, but still the company growing. Okay, in this particular case. So you can see that operation margin is very tiny. It was 1.5 in 2019, and now it's around 5. Previously, it was 12, so it was much higher margin because they could supply cheaper fluorine. Okay, in this particular case, that's what affected. And so balance sheet, what we can see right now, you can see that when they entered 2014, they had a really, really low cash because the business was so good for them that they were spending all the money for opening new stores. And when they faced that problem, they had really, really little cash. So that's why when they had issues and they had to pay roughly 15 million each quarter, so having only 10 million on your account, it was really, really tough for them. Okay, so it was tough at that particular time. So, and you can see that long-term debt, they started accumulating at that time long-term debt. Okay, and during the last year they reduced it. So it was a long-term debt 191 million in 2020, and they paid off nearly 90 million during last year. So we can see that the company, as soon as they start getting back on their feet, they start to pay off that debt, and they already reinvesting there in capital expansion. So they already open new stores, all right, in this particular case. You see what here is net issuance of debt. So minus, it's a cash flow. So we can see that they paid off $100 million, not $1,000, right? So we can see the financing going 103. So they paid, so 3% probably they, whatever they had to pay in 100 is extra. All right, so negative cash, but we understand where the cash went. So this is, guys, the company. So we can see that it's growing, and the only thing which I wanted to show you is the profit per share. Just a second. So profitability. So if we look at where is earnings per share right now, it's $2.12. Okay, and the price is 14. Share price 14. So if we go to, let's say, 2015, right? So it's already when crash started. So we can see that the price at that time was 109 and 48. So the low is 48, the highest was 109. So it means that with the same practically earnings, right, less than 10% lower, right? So the price was like, I mean, how much? 3 times higher. So definitely we can tell that if compare the earnings then and compare earnings now, so we see that at that time people paid it because they believe that the company has all this potential to grow. It's even they had already issues with the supply, but they believe that it's going to recover and go all the way up, right? But now they vice versa, they downgraded this company in their mind, and they're selling it off because they don't believe in what's happening in this company. So in our case, we have to understand. So what should we do? Should we believe in the future of this company, or should we follow the rest of the people and discontinue it, right? So this is the case. Now, this is probably it for fundamental. Maybe the only thing I wanted to show you is
Igor,
yeah.
sorry to interrupt you. Can you let Mick in? He's waiting.
Yeah, sorry. Hi, Nick, how are you doing? So the only thing which I wanted to show who owns the company, 85% is institutional owners, 3.5 the other kind of strategic kind of entities. So I presume it's brokers, funds as well here. So nearly 90% owned by institutions, right? And 10%, 11% is just general, whatever rest, right? So something like that. Now, it's not that much shares available on market as it is. But another thing, if you go to Finviz and look at the short float, so at the moment they have nearly 8% short float of shares. So it means that somebody bought 8% of the shares and then sold them on the market, right? And now if they try to buy those shares, it will take them 6.5 days if they buy the whole volume, average volume, which was during last 6 months or 6 months, a month, right? So average volume. So personally, I see here potential for short squeeze, because if those guys try to buy, so nearly 8% of those shares, if we see the value like lumber liquidator start to growing, for example, breaking through certain levels, right, and then those big sharks, they start adding to their portfolio, right? And other investors also would want to buy more shares. But the biggest thing is those guys who have short shares, they're trying to cut their losses or take the profit if they shorted the company quite a while ago. So, and definitely it can create a short squeeze. Okay, so I'm looking forward to this. So it would be nice to have it. Now, that's what happens here. We can see that if we look at January and December, January there is a sell, but 1.5K shares, so it's 22,000 only. And we can see here that purchase, more than purchase shares, nearly 1 million of shares, 29,000, 35,000, right? So it's purchase. And Wellington Management, so big companies, they are buying this company, so which is kind of a good thing to know. All right, and this is fundamental part of the company. So guys, if you have any questions about fundamentals of this company, just let me know. Now let's go look at technicals. So that's how it looks like. So this is the November in 2007 they went public. Okay, start growing up, and then 2009 hit, and it doesn't look like that much, but in reality they, I think, dropped or here maybe they dropped from 24 to 6, and this drop happened from 2010 to here, while the company was increasing in sales and increasing in earnings, because it's a retail industry, even it's building supply retail industry. But that time, remember, the whole housing market was in trouble, and all the companies related to this market was down, and lumber liquidator lost quite a lot in price, but as a business it was growing at that time. So, and I personally believe that similar situation is happening right now. So they downgraded this company, the company is falling in price because it's so small and kind of they don't pay attention to that, but the company is increasing their sales, increasing their earnings. right? And then what you can see in 2004 when it started dropping. Remember that company was really overvalued at that time, so half of it when it dropped from P ratios nearly 40 to 20, it still was high, right? And that drop was already related to pharma litigate from Chinese suppliers, right? And then we can see these two waves. So not sure what is going to happen right now. I don't personally, I don't believe, or I don't want to believe, right? So that is going to reach this level, which is close to $4. Now, if you bought it here, it was I think around $4, right? And here it was $35. So you could make in 900% within 1 year from that drop because of pandemic, right? So this is how it looks. So to see, this is a drop in pandemic, and after that the recovery to nearly $35 here was the highest point. Okay, so it's like that. And now it's sliding down slow again and again and again. The interesting thing about it that it goes down without any major bad news. So it's like practically nothing about lumber liquidators, because it's small company. Analysts, they don't like companies of that size, so they don't write anything about it, and the company slowly like fading away from the view of traders. And I presume that's why it's kind of dropping in price, and some people just shorting this company, while as we can see some asset management companies, they are buying it off. Now it's if we look at this, probably this is level here, we can 1, 2, 3 times. That was the resistance here, and now we're right at that particular moment. But personally, I don't believe that that level can affect current prices. All right. So looking at indicators here this is a weekly chart. So actually we're in oversold situation. So looks like we're going to it's going to be buy. So we can see the increase in prices. Okay, that's how I look weekly chart. So if we look at daily chart, I added a trend here. Initially, this trend was going like that, but then we broke it up here, right, and went high. So I kind of moved it a bit up, and then added another smaller trend here, and we can see that we are trading within this trend. Probably this is roll 1, this is 2, this is 3, and now we're going to the top. So earnings approaching. And if you see these earnings, right, so trading view usually they put green when the company over performed, right? So whatever estimates was, when the company overperformed, it's green. If it is red, so it means that underperformed. So they missed their earnings. So we can see that during 1, 2, 3, 4, 5 times they overperformed here. After that, we can see the jump in prices. I presume it's one of them has to be here as well. I presume right here, so somewhere in the middle, unless they didn't do any report. So there is a jump as well, jump as well, jump as well, jump as well, tiny jump as well. So we can see that every last 1, 2, 3, 4, 5 earnings, they overperform the market, and they had a spike after the earnings. So based on what we see now, fundamentals, the company is undervalued. The high short interest. So if this earnings is good, we might see the pretty nice spike up. Okay, of course it might not happen, but at least I believe it's possible, quite possible on that. Right. So now this is a daily chart, and this is the 1 hour chart. Right. So we reached 3.5, 1 roll, 2 rolls, and now we're kind of on the 3rd roll. So this is a technical analysis of this company, fundamentals. So let me know your opinion. So what do you think about this company? Would you buy it, or would you stay away from this company? If you buy it, at what level you would buy it, and where would you sell this company? Or you will wait until certain moments and then enter this position. So what's your opinion, guys? So this potential future, the company has previously even told that they are planning to go to around $4 earnings, but that 5-year horizon, right? So at the moment we can see that they start growing. This again, they improving their stores. On the top of that, it's as soon as they finish those legal battles, they actually invested in a manufacturing facility for tiling. So like not floor hinges itself, but also tiles, floor tiles, and they manufacturing themselves. Now, not only relying on their suppliers, but also they kind of move to their direction. So if the company already doing that, so most likely they're going to probably continue to expand in this areas. So they're trying to go into vertical, right, in the supply chain in this particular case. All right. Okay, I will wait. And yeah, very good point, which Nick pointed that the market is still going down, right? So we can see that the markets, at least if based on Dow Jones, we can go another 4% in order to reach the support levels. Right? And if we don't break them, right, at least this is the place where we want to buy other companies as well. Okay, so all right, guys, who is else? Jeremy, Nona, Jerry. So Nona will wait, Nick will wait, Jeremy didn't say anything, right? So who else? Dory didn't say anything as well. Okay. Based on what I kind of looked for long-term strategy, I would probably buy around 1350, 1420 and wait. And even if P ratio, like, I mean, goes to the average, which it had before, like if we go to around 15 level, and remember that average of the industry now is 24. So even if we go to around 15, so it means that it has to double in price. So at least, right? So if the price is 13, so it has to go to around 27 or 14, so it goes to 29. But then if you take into consideration that the company can increase their profitability at least like 10-20%, so it can go easily to $35. And because we already were at that level, the company price was at $35 level last year, so it's kind of would be like a magnet attracting the trader. So they will push, if this price start growing, they will push the price at that level. So, and probably it's nice to have about 160% profit. And because the company is so volatile, it can happen within next year too. All right, so very easily, as soon as positive news on the market. Now, if we do roll strategies, you can see these rolls, even if we do it, this is 1 week down, 1 week, 1 week down, 1 week, 1 week down. So that would be around what, from 30.15 to nearly $15. So $1.50 profit here. You won't take all the profit, but still from 7 to 10%, quite possible to do on those rolls with just pure trading if you do trades on that. Okay, and let's have a look at option strategies. Okay, is it interesting for option strategies? We can see that first of all we have weekly options, which is good. We see that we have strike prices 50 cents difference, sometimes $1, but sometimes 50 cents. Okay, and let's have a look how much we can get. So if we go for this week, so 20 cents last price for $40, so it's out the money. Last trade was 20 cents. Now the spread is huge here, like it's off the chart. But I presume it's maybe because the market is closed right now, and that's why, because it's like too much. And so, but still 20 cents, it's about 1.5% for 3 days, 4 days, right? So if we go for $15, that means that we have 30 cents of time value here. So it means 2% if we get 90 cents until this Friday. Okay, but we're most likely going to buy this year. Now, if we go for example, for a month, let's look. You can go to do here. You can see that 14 is $1.70 here already. So that's a month, right? So from now, today's 15th. So just a bit more than a month, we can get out the money $1.17, which is around what, 7%, right? This was last price. on the trade. If we go for 15, so minus 60 cents of intrinsic value, so it's 126. Well, how much is that? Yeah, 106 of time value here. So which is 6.5% of time value, which is great. I remember when I was trading this company previously, it was huge profit from options. At that time, I remember if I had the shares, for example, 1,000 shares, I would sell the put out the money. So for example, if I have shares and they cost now 14.14, so I would sell put at $13 strike, okay, collect, for example, $1 here, and then I sell $17 call at the same time. So altogether I collect what, $1.75. So it's like 10% for 1 month profit. Okay, and if the share price goes above $17, so my break even would be $1.75 plus 17, it's $18, like 75 cents. Like I sold it at that price. So it was huge volatility, and you could make quite a lot of money. Yes, covered Dory. Yeah, so I had shares in that time. So, and it's interesting because I started from 1,000 shares of Lumber Liquidator, and eventually I got 3,000 shares, and then all of 3,000 were taken from me. So it was very good profit on my side from those trades with Lumber Liquidator. That's why probably I have good feelings about this company. I had a good relationship with it for a while, even it was really volatile, but I enjoyed it. It was fun. I made money. So, and that's why at the moment I'm looking forward to get into it as well. I actually have some shares already, but most likely I'm going to have more. All right, so this is the company. Oh, by the way, let's have a look at buying options. Will we buy options here or not? So we have until January 2023 and 2024. So if we look at, for example, $13, right, $13 call, so which is $1.5 in the money, right? And the price, like at the moment, is huge difference. Let's go look at last price, $5.4 here and $5.5 here. So it's actually cheaper, but it seems like cheaper to buy 1.5 years ahead rather than 6 months ahead. Not six, nearly a year, right? So here, so it's like 10 months, and here 22 months. So, but when you look at the price, it's, I mean, nearly 30%, right? So you pay premium. So very high premium. Although the company has a very high potential to go up as well. Okay, so personally, I would prefer avoid buying call options here because they're too expensive in this case. All right, guys. So do you have any questions about this company or about anything else? All right, okay.
What do you think about Chinese companies, Igor?
Chinese companies, they're all affected by the fact that China is now regulating them, like started regulating them. And the companies are doing well. So, I mean, they're performing well, and their financial results are pretty good. And the fact about what's happening right now is just a lot of investors, they're afraid that they're going to be delisted from the market. You see, not every United States broker, like I mean US broker, allow you to buy from China. So we can, from Interactive Broker, flip from one I mean, market to another market. It wouldn't be a problem for us. But if you use some other brokers, for example, Planner Securities or Charles Schwab's, you wouldn't be able to jump in there. So, and people don't know that they can change the broker and buy it somewhere else. So they're probably selling it off. So this is the major reason. Although I spoke to Max, and maybe not Max, somebody else, that Charlie Munger actually, he's buying Alibaba. So he's bought a lot of Alibaba already. So, and he's keep buying it. So it means a lot of other investors, institutional investors, they're using this opportunity and purchasing these companies. Because can you imagine if Alibaba was like more than 2.5 times higher previously, right? And the business improved since then. And now you can buy it on such a huge bargain. So when this situation is over, it's going to recover pretty quickly. I remember a similar situation, which was political mostly, was in 2014 when United States they put a lot of sanctions towards Russia, and Yandex at that time dropped from $40 to $10, and it was happening while Yandex was making more money and more money, right, and growing in sales, and the price was going down and down, down. It was really frustrating because, like, for nearly 1.5 years, the price was going down, but then you could see that Yandex jumped to nearly like $90 after that. Now it's dropped again because of this political situation, political tensions. All Russian companies dropped down. So I'm actually looking to buy some Russian companies. Like, for example, one of the companies, it's NVIDIA. It's similar to GB Hi-Fi in Australia, right? They sell all this video, TVs, cameras, all this kind of mobile phones. One of the biggest retail stores in Russia in this particular sector, and paying 19% dividends, I think, if I remember correctly now, right? And P ratio is 6, I think, or if not lower than that now, right? Because it was practically pushed down because the whole Russian market dropped down in price. So you always see something affecting the price. So you have to just understand, is it affecting the company itself or not? Because if the company is still stable, yes, it can be delisted, but okay, you buy it on the Hong Kong market and that's it. Keep trying there. Do you have some Chinese companies? No.
I have NIO.
Okay, NIO. All right, NIO is different thing. It's not making profit yet, right?
Not yet.
So it's another thing in NIO. NIO is not making profit, and
I think it actually was supposed to make profit this year.
Yeah, okay. So I'm talking about the companies which making money. So remember, if company doesn't make money, so it's actually can have trouble. So for example, if people stop putting money into this company, they stop believing for whatever reason in this company, so it means that it can go into the drain very quickly. It might not happen with NIO because I looked at their trucks. I want to buy one, so it looks so nice. Yeah. All right. Okay, guys. Do you want to meet? I moved to this place. I think we never been to my place, new place. So if you want, we can meet next Tuesday. All right, 6 p.m. earlier, whatever. We can do Tuesday or we can do Thursday. Tuesday, Katya is working. On Thursday, she'll be at home. So it doesn't really matter for me. So whatever you prefer.
Doesn't matter for me. Any day will do.
So let's do it Tuesday.
Tuesday, yeah.
Okay, Tuesday, 6 p.m.
Mm-hmm.
All right. So will I type your address here, and you remember? So it's 220 to 22 White Street. I didn't learn my address yet. So it's like that. Okay, so okay, perfect. And by the way, some asked about not here, but some asked about investment property projects. So we've got new projects now again with Kingdom Development, and until 28th of February they have a special offer for those projects, because every time when they do it, the way it works, when they find the deal, they have to quickly collect the first amount, right, for deposit 10%. After that, it's not a rush already because they have certain delayed in settlement. And the way it works, whoever invests in order to get this 10%, so initial investors, they always get better deals. So at the moment, what they have, if you buy 2 shares, you get a profit for the third one as well. So when they distribute the profit afterwards, so altogether 100 shares, so it means that you're getting money for your 2 shares back, and then you get profit for 3 shares, okay, back. So that's how it works with the deal until 20th of February. If any one of you wants to see those projects, I can email it to you. So there are different ones. There is a golf course there, so you can participate in that. There are some like new building, like front sea property, so like luxury property. Also, there are some renovations happens, like around 10 properties. I don't remember exactly, but yeah, definitely if you want to.
Yeah, can you please email it to me? Good.
Okay, perfect. Yeah, okay. Okay, doc. So if I don't send you by tomorrow, so please remind me. All right. So Dory, I can see, and Nona. All right. Okay, I'll do that. And so guys, if you don't have any questions, I mean, I enjoy the volatility of the market. Probably it wouldn't be any trading today because the market seems like continue to go down, but maybe by the end of this week. Green day today. All right, nice. I haven't seen it yet. It's going up. Okay. You know, during last week, sometimes I have, when I go to bed, I can see plus 5,000 to my account. When I woke up, it's minus 5,000 to my account. So the volatility is crazy. I mean, so I'm happy going to bed and then bam in the morning. So freaking hell. You cannot do something like that. So yeah, volatility is nice here. All right, guys, it was very nice seeing you. Like I hope you celebrated the Valentine Day yesterday and gave good presents to your loved ones, right? So and, now you're in a good condition. Okay, all the best, guys. Bye. Stop.